Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuant Securities. Mr. Yu, good afternoon. Thank you as always for coming on the program.
Good afternoon.
Well, let's start in the U.S., where stocks overnight were a little lower. It seems that was partly on China dealing with an increase in COVID cases and more lockdowns. The U.S. market will be closed for Thanksgiving on Thursday and Friday. Korean shares, though, were down today, too. Take us through the action on Wall Street and here in Korea.
Yes. After quite significant rise due to the lower than expected inflationary number, we've been seeing some technical correction that's happening in U.S. market. Last week, market corrected less than 1%. Also this week, market seems to be taking some breather. If you look at yesterday's move, Dow was closed flatline, while the S&P 500 lost about 0.2%. And also NASDAQ was down by more than 1% due to the drag down losses in the Tesla and Amazon and Apple stocks. On the positive note, though, Disney shares rose more than 5% after the company announced the ex-CEO will be coming back. Anyway, overall, it seems that the people are trying to look into what might Fed be doing in the future. If you look at the San Francisco Fed President, Mary Ali, she's talking about the possibility of too fast tightening might not be necessary. It might be too painful for the economy. While the other chairmen are also talking about saying that the continue to be raising interest rate is important. Loretta Meister is talking about how inflation needs to come down much more substantially before supporting for a pause. Overall, this kind of news is affecting the dollar index, and dollar jumped nearly 1%. Also, this is because we saw news coming from China that core situation in China seems to be worsening, and therefore the safe haven demand for currency is U.S. rather than China, it seems, and that's affecting the overall market. And therefore, we saw Shanghai composite falling again, and while the Kospi also is down by 0.6%, and also the Kosdaq is down by about 0.88%. Foreign investors to be a continuous net seller of this market. They've been changing their movement after significant net buying. Now they sold about 35.9 billion of Kospi and 75.7 billion won of Kosdaq, but the overall net selling amount is not that significant. I think that just they're taking some breather. For the time being, we are seeing interest for Korean insurance sector and nuclear power sector and also construction sector. Most of these sectors are up by more than 3%.
Well, with China sticking to its lockdown policies because of COVID, some other factors too, oil prices are lower the past several days. West Texas Intermediate right now on the edge of breaking below $80. The Saudis are denying reports of OPEC cutting production, but that seems to have been a factor. What do you see happening with oil prices?
Yes, everybody's talking about a global slowdown next year. We are talking about possibility of economic recession globally, and therefore people are concerned about the demand in regards to the oil. If you look at WTI futures, it did fall to as low as $75 per barrel. This is lowest since the OPEC considering output before. Also, if you look at the prices, it did recover to about $80 per barrel because Saudi Arabia denied that the output increase for next month is not going to be happening, while the Saudi Arabia Energy Minister, Prince bin Salman, is talking about how they might be reducing production if needed in order to balance the supply and demand. As you know, as I said, if you look at the overall demand outlook, it remains to be quite uncertain as the economy is slowing down. And also the China, which is the biggest importer of oil, continue to be suffering from the outbreak of virus, COVID. So therefore, there will be quite a lot of uncertainty for the time being. We think that the oil price should be in a track of a range bound, anywhere between $75 to the low end to the $90 to the upper end. We think that the overall supply and demand picture is still not in favor of oil price further rising, but rather further falling.
Well, looking at the economy as a whole, the Korea Institute for Industrial Economics and Trade is calling for growth next year of 1.9%. The Korea Development Institute recently revised its outlook to 1.8%. So it seems there's a growing consensus we won't reach even 2% next year. What do you make of these forecasts, and what factors do you see as the main points to consider?
Yes, if you look at Korean economy, it is expected to expand by about 1.9% on the year of 2023 because of the aggressive monetary tightening policy by the major economies and global economic slowdown. This is the thought of think tank, the KIET, Korean Institute of Industrial Economics and Trade. They're expecting this growth rate to go down to 1.9% year on year compared to the forecast of this year of 2.5%. We think that that's a quite reasonable estimation. Of course, the BOK, the government is expecting the growth rate to be slightly higher than KIET's number, somewhere around 2.1 to 2.5%. We think that, though, slowing down is necessary because we're seeing a slowdown in the global economies. Clearly, continuously, the war between Russia and Ukraine is putting pressure in terms of the oil prices. That clearly is a negative news for Korea as we are a major importer of oil. In terms of also domestic demand is also get affected when you have a higher interest rate environment and slow wage growth rate and also higher energy prices. So all that is affecting the expected growth rate. But nevertheless, if we think that the 1.9% growth rate, that is quite reasonably good number if you compare to the U.S. expectation of somewhere around 1.2 to 1.5%. Global economy is expected to grow at 2% plus, but not that significantly more. So therefore, we think that a lot of these negative news in terms of economic growth rate is already priced into major asset classes, including KOSPI and overall Korean won terms. It already has depreciated quite significantly. Recently has appreciated, but nevertheless, it's still at 1350 level. We think that that is too cheap in terms of the currency valuations.
All right, Mr. Yu, we'll have to leave it there for today. Thank you as always for coming on the program, and we'll have you on again soon. Appreciate it.
Thank you very much.